This show is brought to you by NMDC Group.
Oil rises as Saudi and Russia reaffirm their output cuts, and MENA debt issuances nearly tripled this year. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Oil prices edged up this morning after Saudi and Russia reaffirmed output cuts until the end of the year, despite the Israel-Palestine war keeping supply tight. Investors are also watching out for tougher U.S. sanctions on Iranian oil. Brent crude futures are trading at $85 a barrel, while West Texas is at $81. In line with analysts' expectations, Saudi confirmed it would continue with its cut of 1 million barrels per day. Moscow followed, extending its 300,000 BPD cut until end year. MENA debt issuances nearly tripled in value during the first 9 months of this year to $61.1 billion compared to the same period last year. That's according to LSEG's Deals Intelligence. The number of issues declined 3% over the same period. Saudi was the most active issuer, accounting for 50% of total bond proceeds, followed by the UAE with 32% and Bahrain with 7%. Financial issuers accounted for 54% of proceeds raised, while government and agencies accounted for 43%. Asian markets rallied again this morning following Wall Street's sprint on optimism that the Fed will stop raising interest rates. The bank's decision last week to pause interest rate hikes for a second meeting and hint that it won't tighten further boosted the market and sparked talk of an interest rate cut in the new year. This morning, Asian markets tracked the U.S. rally, with Tokyo up over 2% and Hong Kong, Taipei, Manila, and Jakarta up over 1%. Global fund managers sold China equities sharply in October, despite further steps from authorities aimed at boosting its economy. A Morgan Stanley report reveals China and Hong Kong equities saw a combined $3.1 billion in net outflow from active long-only funds last month. It's a third consecutive month of net selling exceeding $3 billion. European domiciled funds led the outflows. The report says European funds have offloaded about half of their holdings accumulated since late 2020. Ant Group has received Chinese government approval to release products powered by its AI large language model to the public. Unlike other countries, China requires companies to submit security assessments and receive clearance before releasing AI products. The financial affiliate of e-commerce giant Alibaba Group in September unveiled a finance-specific AI model. It has since been testing consumer and professional apps for the products. Half the world's 2,000 biggest listed companies have set net zero by 2050 targets, but just 4% meet tough UN guidelines for what constitutes a quality pledge. That's according to Net Zero Tracker. It says corporate targets from Forbes 2000 index companies jumped 40% to 1,003 in October this year from June last year. But just 4% of the targets meet the UN's criteria, for example, by covering all emissions, starting to cut them immediately, and including an annual progress update. And Five Nights at Freddy's remained in first place at the North American box office over the weekend, beating out the awards-titled biopic on Elvis Presley's wife, Priscilla. But the video game-based film is crashing in its second weekend. Despite maintaining its lead in ticket sales, Freddy's still had a frightening drop from $78 million in its debut weekend to only $19.4 million this week. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye.
This show is brought to you by NMDC Group.